For the past 2 weeks, global shares have seen a bit of selling. There are some concerns out there that this current bull run might be coming to an end. But are we about to see one last gasp, or is this really it? So hi there everyone, welcome to the Traders Circle Weekly Market Update. It is Tuesday the 11th of November 2025. It is already November. And before I get started, you do need to be aware that whatever I say is general advice only. The big news this week, or at least for the past 48 hours, is that the US government is going to reopen. They've been shut down for, I think, about 42 days now, 41 days. It's the longest shutdown in US government history. Over the weekend, a lot of spending was cut off. Additional spending on food benefits and things like that were cut off. A lot of air traffic controllers stopped showing up to work. There were huge disruptions around the nation, and as a result, a bit more pressure was placed on the government, and they came together and they reached a deal. It looks like the Democrats have caved, basically. It really does seem like a lot of the powerful Democrats in the US would rather side with the Republicans than with their own voters, but regardless, they came to a deal and the market liked it. We saw a big pop in US markets overnight. That was after, perhaps a little bit of gains on Friday night after a big reversal from an initially bearish move. And that left US markets, holding above support, bouncing off key trend lines and looking quite bullish. I don't know how long a bit of enthusiasm will stay with this report or with this reopening, because the market didn't really react negatively to the shutdown to begin with. As the shutdown went on, it didn't really seem like there was much selling in relation to the shutdown. So I'm not too sure we're going to see that much buying now that the government's reopening. The market is a fair bit higher now than it was before the shutdown began. Alright, the other thing to remark on is the bank reporting here in Australia. And look, despite what the share prices have done, the bank reporting was terrible. It was, excuse my French, atrocious. We saw ANZ report lower earnings than they did 2 years ago. We saw them lower their dividend. We saw lower earnings from Westpac and NAB. We saw CBA basically report flat earnings. And you can say that, well, there was lending growth. Revenues grew basically, but they haven't been able to translate that into increased profits, and they haven't for some time now. They've only been able to slightly increase dividends by increasing the payout ratio. But what happens when they can no longer increase the dividends? They blamed competition, and that competition isn't going anywhere. It isn't dying down. They blamed one-off costs as well, because they fired and then rehired a bunch of people, and I can tell you, my experience with people working in the banks and stuff, those aren't one-off costs, those are ongoing costs. So I thought the bank reporting was atrocious. In terms of the share price movements, some of the banks fell, some of the banks rose. Most notably, we saw CBA fall very strongly on the quarterly report today, and that was after reporting the best results out of all the banks. It obviously fell because it's way, way more expensive than the other banks. And I don't just mean that the share price is $170 versus $30. From a valuation perspective, it trades on a much greater earnings multiple, much lower dividend yield. And even though they had the best report, it wasn't enough to justify that excess premium. Regardless, the bank reports haven't increased profits for years. They've only increased dividends by increasing payouts. Competition and problems are mounting. I don't think they're worth anything near what they're trading at. It really is. It really is incredible. If CBA was an American bank, it would be at maybe $90, maybe $100, possibly less. But because we don't really have that many alternatives to invest in, and yet our market is being pushed higher with the US, they keep getting pushed up. It's more of an index story than a sector story, I will say. I wanted to finally say that we're heading into the end of 2025, the start of 2026. It's been right around 2 years for the global everything rally. That global everything rally probably started at the end of October 2023, and we've seen everything rise: gold, precious metals, cryptocurrencies, shares, in many cases real estate, although a bit less so on the real estate side of things around the world. Everything's jumped though, and really you can point to two things that have driven that rally. It's been interest rate cuts in the Western world, and it's been money printing in the US. Now the US is continuing their money printing. It's only getting more severe. Despite Trump's rhetoric, he's actually accelerating the spending of US government money, accelerating the government money printing. So that's going to remain in place. But we are coming to the end of interest rate cuts, at least it looks like, in the Western world. It looks like most of Europe has paused. It looks like New Zealand's pausing. Australia, maybe we get one or two more cuts. Maybe this is the bottom. Maybe the next move is up for us. The RBA doesn't know, so I don't know. It will depend on data, but it doesn't look like there's many more left in Australia. In the US, they're expecting one more in December and maybe one more in the first half of 2026. The thing is that that's the market pricing that in, not the Fed. And most of the Fed members have been a bit more reticent about further rate cuts. That's because their inflation is still 50% above the Fed target range. The inflation is 3%, target range 2%. It hasn't fallen for several quarters now. So I don't know if they're going to keep cutting rates with inflation not falling any further. So given that one of the primary drivers of the global bullish move is starting to perhaps turn, and that is interest rates, are we going to see, this bull run continue? Maybe we'll see one last gasp up as we head into that Fed cut in December. But if that does look like it, I'm not sure we're going to see too much further upside for global everything rally that we've seen. I could be wrong, but yeah, most of the stuff that's gone up in price hasn't gone up the equivalent amount in earnings, and those that have gone up the equivalent amount in earnings, it's because of pretty sort of dodgy accounting practices or circular accounting. So maybe we're at the end, maybe not. Like I said, one last gasp up into December and January, and then it'll be interesting to see what 2026 holds. At some point that year, I do imagine we'll see some pretty significant selling. So if we have a quick look at the charts for this week, guys, we can look at the Australian market. It's fallen for the past 2 weeks. We've been on this sort of fairly steep downtrend. We fell back to support at 87.40, and we held that level as support. We bounced off that level, and we have sort of pushed above the downtrend line. That being said, it wasn't a convincing bullish gain after breaking that downtrend line. We held the next level, roughly 88.80 to 8900, where the 50-day moving average is. We held that level as resistance today. Now, a lot of that was CBA's report. CBA finished 6% lower. That drags our market down a lot. But regardless, it's a hold of resistance. With the hold of 8900, maybe we will retest 8750. It's a little bit hard to say. Possibly we could just see further sideways movement here. I wouldn't be surprised if that was the case. If we break 8900, we're looking at 9000, and to the downside, if we break 8750, we're looking back at 8650. If we have a quick look, and this is the US S&P 500. It's been on a nice long uptrend since the lows of April, and in fact, you could actually draw it as an ascending channel as well. It saw a fair bit of selling on Friday, but the market actually rebounded and came back to hold the uptrend line, hold above the 50-day moving average, and then we had the bounce overnight with the news about the US government reopening, and that's pushed it beyond the short-term downtrend, stochastic turning to point higher, holding the ascending channel. And to me, that basically indicates that we're probably going to see a move back towards 6900, possibly even above, possibly the upper bound of the channel, 6950-ish. So that's what the technicals are telling me, and obviously, if we see some sort of fundamental news, that could shift those technicals, but for now, things do look a lot more positive. We do have some big events coming up this week. I believe we've got an Australian unemployment reading and a US inflation reading on Thursday and Friday. Those could shift the narrative for either country, really. But for now, US markets looking a bit bullish and Australian markets looking a little bit more sideways. The real question is, are we going to see, one last gasp up to the global everything rally? Will the rally continue beyond that? And will 2026 be the turning point? So I will wrap it up there for this week, guys. Hopefully you guys enjoyed. If you did, click like, click subscribe, and we'll see you next time.